SEBI, the market regulator, proposed a framework for regulating ESG rating companies. ESG rating companies, SEBI, the market regulator, presented a framework to regulate ESG, environmental, social, and governance, rating providers on Monday, with the goal of allowing credit rating firms and research analysts to offer such services. Credit rating agencies, CRAs, and research analysts with a minimum net worth of 10 crore rupees would be eligible to be recognized as an ESG rating provider or ERP, according to SEBI's consultation document. Only an accredited ERP can provide an ESG rating to a publicly traded company that wants one. SEBI has also suggested that ERPs should state the domain in which the product is associated. Carbon risk ratings, for example, should not be referred to as ESG ratings. ERPs should also offer at least one of the rating products, ESG impact ratings, ESG corporate risk ratings, or ESG financial risk ratings, as well as any other ESG-related rating products that are suitably labeled, according to the report. It has been suggested that ERPs should always use suitable nomenclature for the items they supply in order to minimize any confusion among stakeholders. Because ERPs' activities are typically not regulated, increasing reliance on such unregulated ESG rating providers in securities markets raises concerns about the potential risks to investor protection, market transparency and efficiency, risk pricing, and capital allocation, among other things, according to SEBI. Furthermore, a lack of openness in this sector raises the possibility of greenwashing and asset misallocation, which could lead to inconsistencies in ESG ratings and, as a result, a lack of trust in them. As a result, more than ever before, there is an urgent need to guarantee that providers of such products operate in a transparent and regulated environment that balances the demands of all stakeholders, SEBI explained. SEBI regulating ESG rating companies. An ERP should be plainly displayed. The type of ESG rating product should be widely displayed on an ERP's website and in ESG rating reports, whether impact-based or risk-based. It should publish its rating technique for all of its products on its websites while preserving a sense of propriety and confidentiality in the methodologies. In terms of the rating procedure, SEBI has advised that ERP follow a suitable rating process and maintain consistency in the application of its methodology across ESG ratings provided by it for the same product, as publicly reported. Professional rating committees should be present in every ERP, with members who are sufficiently competent and knowledgeable to award a rating. In addition, each ERP should develop a clear policy for dealing with conflicts of interest, and such a policy should be implemented. ERPs should also be required to follow a subscriber pay business model, according to SEBI. In a subscriber pay model, investors may be the primary source of revenue, but a subscriber can also be an issuer. The Securities and Exchange Board of India, SEBI, has extended the deadline for public comments on the consultation paper till March.